Hey everybody, we've been trying to get Brian back on for a while. He's had a lot of things going on in his life. Congratulations to Brian on getting married and having a baby as well. So I mean, it's a beautiful process, to have all those things, and a blessing to have those things happen in your life. So congratulations on that. But Brian came on a couple years ago, and we talked really deeply about relative strength. And if you guys hear me talk about this stuff all the time, relative strength, I beat, the crap out of that, or intermarket analysis. But if you go back to the video with Brian, that happened in 2021, I'll also leave a link in the description. You get to really get a good feel about what intermarket analysis is, how it can help your trading, what it doesn't do, and also how important is relative strength. And Brian also shares some of his systems, how he learned to use these. Today, we're going to be going through his timeline. Brian has brought some charts, which is always great. And, just glad to have him back on. How are you, Brian?
I'm doing great, Jason. Glad to be here.
Good, good.
And yeah, congratulations to you as well for getting engaged this summer.
Thanks, man. Much appreciated. It's like I said, it's a blessing, man. Life happens and it hits you fast, and it's always good to have good things happen.
Yeah, thanks for sharing that on Twitter. Like your proposal was like really unique in the baseball field.
Oh, that was
Kudos.
wild. Yeah, we were at a basketball game, at the Cavs game, and my girl, she kind of is she's more extroverted than I am. I'm more introverted.
Yeah,
So, for me, a nice proposal is on a beach with just her. Her nice
yeah,
proposal is like, something more flashy. And so I stopped trying to think of what I wanted, and I was like, oh shit, let's try to figure this out. And I had to call every single so I was in entertainment for many years. I called every
yeah.
single person I possibly could call to try to get an understanding of, like, hey, like, can I do this? Can I get on the Megatron? How do I get engaged, like, on the Megatron here? And they just continued to say, we can't do that. Sorry, can't do that. I'm sorry, over and over again. So after that happened, they ended up finally saying they could do something, and I didn't
Mm.
know exactly what that something was going to be. And finally, it turned into that. So like, it was pretty wild to be doing that in front of 20,000 people. But today I'm like, I'm glad it went well. I'm glad she liked it. It was kind of her dream proposal, so I'm happy.
That's awesome. Did she have any idea leading into it or no?
No idea.
No
Absolutely no
idea. Wow.
idea. Yeah, yeah.
That's awesome. And you caught it beautifully on video too.
Yeah, man, it was great. Well, actually, what's funny is the only reason it's on video is there's two things. One of my friends that I've known forever, like literally forever, was randomly at the game, and they saw me on
Mm.
the Megatron and they started to film. And then the other
Oh,
thing was, there was a person behind me that
yeah.
I put my arm around my girl, and I like whispered to them. I said, "Hey, when the camera comes over here, please film." And I didn't know if they really heard me or not. Um,
Yeah.
and like, then, like, so when I thought they didn't hear me, I wrote it onto my phone and I held it behind me. And
Oh, nice.
he
Yeah.
saw it, and so he filmed it. So it was just luck that those two things just kind of came together.
Oh, that's awesome. Nice. Um,
Well, cool, man. Well, let's hop into it. I know that we were just talking before we started recording about how dynamic the market has been now, and how dynamic it's been. Um, Now in 2021, there's a lot of people who had a lot of trouble. I've talked to a lot of people about this, and I had a lot of traders with a lot of funds that had that majorly underperformed that year. They underperformed the S&P. They had trouble continuing to make good returns because some things like tech weren't the outperformers that year, and that hasn't happened in a long time. Tech has been the outperformer for many years. 2021, it wasn't the outperformer. We got to this commodities rally, this value trade, things like banks, energy. Basically, the reflation trade started to take over, and that was right after the
mhm.
election. It was in 2020. That was a huge shift that so many people, really never talked about, because when you had the election happening and you had Biden and Trump and everybody was fighting, the fear in the world and the markets was huge. People were every single day talking about that, it's going to be the end of the world if Trump gets in. It's going to be the end of the world if Biden gets in. They're going to hit the button on the way in or out, whatever it was. I mean, people were really, really freaked out. And short positioning got crazy. Every news station was running the same thing. If Trump gets elected, by energy, basically the reflation trade, and if Biden gets elected, by tech, solar, and so on, which is funny. It was the opposite trade, which is usual for the media. But when you really look at it, you could see the relative strength flowing into those areas already. And then it took over, energy really took over towards the end of the year and continued straight through 2022, basically. And now we get into this year. So get into your timeline in 2022. What are we looking at here?
Yeah, so this is basically just the last 15 months, right? And you kind of touched on 2021. And, really, if we take it back to the start of this decade, that's when things really started, becoming dynamic, right? You had growth outperforming in 2020, and then you had value and commodities start to emerge in November of that year. That continued even after these more speculative growth stocks peaked in early 2021. That value trade just kept flying, right? And like you said, there was all these people that were just, it's easy to become like, a growth only trader or a commodities only trader, right? But this decade so far has shown that you need to be adaptive, and you need to like go where the opportunities are, right?
Yep.
You could have been a growth only guy in the 2000s, right? And growth struggled in the 2000s, and there were these beautiful uptrends in the value stocks and emerging markets, in commodities, and it's tough to sit through a decade, right? And just trying to like force trades in a sector that you love, right? And ignore all these beautiful uptrends or in stuff that you shun, right? And so that's kind of like, this decade so far. Yeah, like 2020, we had the growth, 2021 value, and that kind of even outperformed in last year's downtrend, right?
Yep.
And then now you're kind of starting to see like, well, so far this year it's been growth that's been leading, and then now you're kind of starting to see that rotation back into value, right? And we'll go into this more detail. We'll kind of like look at like the events that happened over the last 15 months. So this timeline, this is my attempt to just sort of give you guys an overall summary of a lot of the charts that I share. Like, it's easy to get lost in my Twitter feed, because I share a lot of charts every day. And over the course of a year, you're talking about hundreds of charts. And this kind of just summarizes like, some of the main ones. And a lot of these are monthly charts, weekly charts. A lot of the charts I share over and over again, because I feel like they're just, just really major support levels or breakout levels that we want to be watching in very important sectors of the market. And so often I kind of feel like I'm just kind of resharing like a broken record, the same chart over and over again. Even on my blog, it's like, how many times have I posted this, like, SLX chart, on retesting a major base, and then now like on the verge of making a major new breakout, like, home builders was another big chart. And so, yeah, that's kind of where home builders is where this timeline begins. In early April, I was looking at there's a Dow Jones Home Construction Index that Stock Charts has, and I can actually show you guys the chart. So here's the chart.
Nice.
Can you see that one?
Yep.
Yeah. Yeah, so this is a really, when I first looked at this chart back in April, even prior to that, I was kind of following this like when it broke out in 2020, right? And I'm like, hey, this is a pretty significant breakout in a very important sector of the economy, right? This is not something that we want to be ignoring. Um, like despite all the COVID lockdowns and et cetera, we got a major breakout happening here, and we want to be paying attention to this, right?
Yes.
And so that breakout, it continued. So it kind of like really started emerging from that base in late 2020. It kept rallying into late 2020, or 2021. And of course, markets are forward looking, right? And prior to the rate hike cycle, home builders and a lot of segments of the market started declining, right? The Fed's rate hike cycle, that kind of started in March of last year, right?
Yes.
But a lot of the market had peaked in November of 2020, of 2021. So 4 months prior to the Fed starting rate hikes, a lot of segments of the market, including home builders, had peaked, right?
Mm-hmm.
And you can kind of look at like 10-year bond yields, like those were on the rise, like early 2021, right? And so the market kind of was seeing that, the long end of the bond yields, they're on the rise, and then eventually the short end is going to start rising too, right? So
Yes.
so a lot of this market, it's like you can get lost in looking at what the Fed's doing, but the market is like looking ahead, and like so home builders peaked in late 2021. They were on the decline, and then look what happens in April. They touched that major base support again, right?
Mm-hmm.
And this, like here's the key thing. Like this is a month after the most aggressive Fed rate hike cycle started. That home builders are hitting major support, right?
Mm-hmm.
And this is like one of the most counterintuitive things the market did at that time in
It
April.
always
like, who in their right mind in April would be like, oh yeah, we want to be actually like looking at entries into home builders and not like pressing shorts, right?
Yes.
That's like one of the most counterintuitive things. Like here you have like rates ripping. They're making their way from like less than 1% all the way up to 5%, right? That's a really significant jump in a matter of a couple quarters. There was all sorts of like, opinions, forecasts, Twitter macro spaces talking about, hey, the housing market's gonna get crushed. This is gonna result in a really nasty recession, right? The consumer's not going to be able to afford anything, etc. And this is the beauty of price action. This is why we follow price action, right?
Yes.
And so going back to the timeline, again, home builders hitting 17-year support in April, right? So that was kind of like the first sign that, hey, you don't want to be too bearish here. You want to start, entertaining the bullish thesis now, right?
Mm-hmm. Yep.
Not necessarily taking any trades, but hey, just to keep an open mind, right? It's not to say that you want to start building a big position in stocks here, right? And I'm going to actually get into that later, like buying support versus buying a breakout. We'll kind of look into that a little bit later, but I just want to continue on here on this train of thought that, like last spring, early summer, we had, a few, like bullish signs that, hey, look, you got some pretty big markets that are hitting some major support levels. So the next set happened in June when you had stuff like small caps, financials, steel, and even Bitcoin hitting some multi-year support levels, right? And I can actually kind of show you guys some of those. So here we have the small caps, and here, like June of last year, we have this major base retest happening, and that's kind of where small cap stabilized, right?
Yep.
And that didn't mean they started a raging bull market from that point. They went through, quarters of sideways, but, they stabilized.
Mm-hmm.
And I can actually, so then here's financial, a similar story, right? Hitting multi-year support in June of last year. We got even Canadian dividend stocks. I mean,
Yes.
you had a breach of the support there, but it recovered the following month, right? And that was a major false
And I
breakdown.
always think of, I think it's important to also say something that's important for newer traders. When you're thinking about support and resistance, you can't think about it as a perfectly, like, it's going to hit this level and that's it. Like, support is around a certain area. And actually, when you back test it, it's around 5%, like that's a pretty big zone. So, this is why we wait for confirmation. We don't just buy when it hits support. We wait for some form of confirmation. But most of the time, like what Brian's showing us right now is these are very simple charts that are showing a simple idea that are very powerful to show you when trends have changed. Go ahead, Brian. I just wanted to add that.
Yeah. And then I'm just going to finish this part off with steel, right? So again, like you said, these support levels, they're not like, it's not like they're not magic, it's not like you hit them and then you start flying. You do get some, you got to draw them with a crayon. That's why I always kind of try to use these thicker lines. I use monthly charts and weekly charts because they tend to, produce a little bit less whipsaws. So, these last three charts, you can kind of see a similar pattern. There's a really similar structure, but, here's steel, here's, so these three charts. So you have financials, Canadian dividend stocks, and steel stocks. So you can kind of see that similar pattern where, late in 2020, you had this small breakout from this red line. And then you had a bigger base breakout in early 2021, right? And then you had this basing action for several quarters. And you see that in steel, you see that in dividend stocks, you see that in financials, right? So a lot of these markets, they have a similar kind of pattern, similar kind of dance. And that's why on the timeline, going back to the timeline, you had a lot of these different markets in June hitting support levels. So now you're like, okay, well, we had the early signs from home builders back in April. Now we have a lot more charts that are kind of saying, hey, we're on major support here, right? This is not something that we want to be ignoring. And so I like to think of like the last 15 months as having kind of three major phases, right? You had the early phase that we just talked about, the spring and the early summer of last year, where you had the earliest markets hitting major support. And it was just a handful of charts that you could point to and say, hey, look, there's some bullish evidence emerging. The second cluster was kind of the fall and the winter time. And that's when you had a bigger cluster of bullish evidence. And this is where you really started taking on trades, right?
Yes.
And the third cluster is kind of the last 2 to 3 months where you're seeing a bullish evidence every single week now, right? And there's just so many things happening that, I didn't want to clutter this chart too much, but these last 3 months, there's just so many breakouts and so many charts that I can point to that,
you could probably add another 20 to that.
Yeah, absolutely. Right. But it's just this timeline is just to kind of show you guys, like, that the market is a very gradual process to go from a downtrend to an uptrend. We're so short-term minded that we always think, hey, we hit major support, now we're going to do a V-shaped, rally from here. But usually it's like quarters of frustration, right?
Yeah.
And so, a lot of the charts I just showed you guys are monthly charts, and monthly charts, you know, each candle is a month, and usually, like, you know, it takes several candles to, like, you know, make a, you know, a turn, and then several candles to base, and then break out. So we're talking, like, you know, quarters usually, right? And that's how, but that's typically the time frame that markets work in. And you know, I always joke that, you know, sometimes on a 3% up day, everybody's like, "Hey, raging bull market," right? Or a 3% down day, everybody's like, "Hey, the next crash is coming," right? And they kind of extrapolate, like, what's happening today or this week, and kind of extrapolate it out as if, like, that's what's going to happen over the next quarter, right? But, you know, these markets tend to, you know, chop around, and what's happening day to day doesn't mean much. But when we zoom out, what's happening on what the weekly charts are telling us, what the monthly charts are telling us, those are major signals, right? And yeah, so then we can kind of look at this second cluster in more detail, right? So that's so the first one back in September, we kind of looked at the Canadian dividend ETF, right? That had major support. That was in September. We even had stuff like gold miners. So this is Wheaton Precious Metals. Now this hit a pretty major support last year as well, right there, right?
That's interesting.
And this is, like, you know, yeah. So this was the one chart that really had me interested in gold miners. I was watching it, like, you know, for quarters leading up into this this level being tested there. And I was like, you know, if that level hits, that's going to be at a very important point in the gold market, right? And, you know, this is something from watching charts for so long, is there's a lot of charts that are very, like they're not very clean, right? They're very choppy. They don't have clear-cut support levels. But then you find, you know, certain stocks in a sector or certain indices, like that home builder index, right? That the chart just really leaps out to you that, hey, this is a very clear-cut, you know, level that, you know, if we get there, you know, don't fall asleep at the wheel, right? There are charts that, you know, they just leap out to you that, you know, you get excited. You're like, hey, you know, this is a really clear-cut level to define risk at, right?
And let me add something, Brian. Just because everybody, you know, so many people talk to me about trading and they talk about edges, and they're like, what's an edge? How exactly do you get an edge? What Brian just described to everybody right there is an edge, you know, like, and it might not sound like, when people want to hear an edge, they want to hear me say, like, oh yeah, when I do this, it works every time. Like, it's not the way anything works. But what Brian said is you have a chart. It has very clean levels. It's not choppy. You know, it also was choppy, and then it broke down, and he was patient. So patience is one of his edges too, but also the ability to wait, be patient, and find a clean chart in a sector that's also one of the bigger miners in the junior space, and find it, wait for that signal, you know, hitting that support, and then he probably would wait for either a breakout style pattern or something. Remember, this is a monthly chart, so, you know, there might have been a 20 to 50 day high breakout pattern, or however Brian looks at that pattern in that to get long on. So, you know, these are very important edges that people don't talk about, because people want to hear there's a trade every day. They want to hear there's something exciting always happening. They don't want to hear about how I have to, you know, sit on my hands, and I always talk about going fishing. Like, you know, really, like, that's a lot of it. You're sitting there, you have your poles in the water, and you're sitting there trying to kind of just enjoy your day. Instead of trying to, like, catch the next fish, you've got a lot on the line. Like, for example, I use, when you have a setup like this that you're waiting on, you know, for me, that's kind of like, I look at COT reports and I'm like, okay, this is an extreme point. That doesn't mean that I'm going to buy anything. That just means, hey, this is an extreme point. What he's saying here is, I'm not just buying when it hit that support zone. I'm going to wait to buy and when I get my signal too. So all of this is the same kind of idea, but different types of edges in the market.
Yeah, you perfectly led me into the COT data, right? Because that's one of the things I had on this timeline here, the smart money going record long
Oh,
US
nice.
stocks. And, again, everything on this timeline is just, like a weight of the evidence, right? There's all these different types of evidence. There's what the COT data is showing, what the pre-strikes are showing, breadth, what that's doing, right? What the intermarket stuff like, high yield bonds versus government bonds, what those are doing. So there's a lot of different types of data that's shown on this timeline, and they all kind of join together to give you that bullish picture, right? And so, going to that COT data, so I'm going to actually show you guys, this is a chart that I assemble each week, and it basically looks at, all the major US equity futures data, Russell, NASDAQ, Dow, S&P 500, and it combines it into one overall index of positioning, right?
Yeah.
So what this is kind of showing you guys is, going over the last several years, hedgers had a very, very high exposure to stocks, during the depths of the COVID crisis, right? And they got, their positioning got super low, before the big rate hike cycle started, right? And this is kind of where stocks peaked, late 2021. And look at the positioning was super low. And then all throughout 2021, as stocks declined, look what happened to the positioning. It skyrocketed back to the levels where it was in the depths of the COVID crisis. So this is telling you, hey, by the middle of 2022, right, when all this stuff on the timeline is hitting major support levels, you have the smart money as long as there were in the depths of the COVID crisis. So it's like slapping you on the face saying, hey, don't get too bearish here. Like there's all this opinions you have about the economy going into a recession and rates killing the consumer and yada, yada. But you have the smart money record long, you have major support levels in not just one market, but in several different key important sectors of the economy hitting major support. And so that's kind of screaming at your face saying, hey, this is the time to start looking and building some, early entries, right? Not necessarily, getting aggressively long, but starting to, build some starter positions, right? And get confirmation. So that's the smart money data we just looked at. We looked at the Canadian dividends hitting support. So, you started getting, by September, you started getting, quite a bit of evidence, right? And then the low was in October for the S&P 500, right?
Yes.
This was also when you had Japan hitting 25-year support, right? So, so by the time the market hit bottom, right, you already had some evidence to say, hey, that this is a logical, turning point in the market, right? And so what happened? Continuing on into the winter time, this is when we started getting the first breakouts, right? So this was the Dow. So again, the market that hit support the earliest was the market that broke out earliest. And it's also, if you look at year-to-date performance, home builders are one of the strongest performers year-to-date, right?
Yes.
And, this is the reason why, we want to pay attention to what's hitting support first, what's breaking out first, what's showing relative strength, and then following that, right? This is the reason why we do relative strength, right? Is we want to be in the stuff that's leading, right? That's the stuff that's going to provide us alpha over the S&P 500.
And the most important part of that is, what you've been pointing to over and over again is you're not only looking at what's leading on the way up. Like we could talk about what's leading today. That doesn't matter as much as what was leading on the way down during the COVID crisis. Well, that was semiconductors, tech. What was leading during this last kind of bear market that happened in 2022? So that was now once again, it wasn't tech at the beginning. It was things like Europe,
Mm-hmm.
and some of these other areas. But then once 2023 happened, then we saw relative strength flow into which there was a big drawdown at the end of 2022, into the beginning
Yeah.
of the year, and then tech started being the one that was leading that one. So
Mm-hmm.
that's the way you can really use this and make a powerful system and trading plan just by
Yeah.
understanding that one concept.
Exactly. The relative strength concept.
Mm-hmm.
So this is so I'm going to go back to something I touched on earlier, and that's to kind of like contrast buying on support versus buying the breakout.
Mm-hmm.
And we're going to look at home builders because this was the earliest market to do both of those.
Yes.
So let me just find the chart here. It's this one, and so this is that home builders index, right? So the one that we looked at in the beginning, where did that chart go? Yeah, so this is the monthly chart of the home builders, and we looked at how it hit major support as early as April, right? And you could have gone long as early as April, but would that have been the wisest thing to do, right?
Mm-hmm.
And here, sorry, I'm just trying to find my chart.
Oh no, you're good. And yeah, no, that wouldn't be. It's a thing when the hardest thing to really do is to see that, hey, this is probably turning around now and not do anything about it. That's probably the hardest
Mm-hmm.
thing in trading to learn, is that discipline to not just buy bottoms, because like you're looking at here, we hit what you thought was a bottom, what looked like
Right.
a bottom and hitting support went up and then
Yeah.
retraced all the way back. And most traders aren't going to be
Right.
that long term that they can hold on to that. You're really
That's
trying to
exactly it. So it's one thing to look at these charts in hindsight and say, hey, you could have just bought on support and closed your eyes, went on notification,
Yep.
even took all off, and then you came back, and then in October your position is flying, right?
Mm-hmm.
It's easy to say that, but a lot of us, we're looking at what the markets did each week, right? And this chart is now zooming in on the weekly, right? Before we were looking at the monthly. This is when I first tweeted that, hey, look, home builders are hitting this major support. That was right here, right? This was in April. Yeah, initially, the price stabilized and it kind of, went sideways for a bit, and then it had this big bounce, and you could have been like, hey, here we are. We're now moving off that big support level, and we're gonna, it's off to the races. And then the market's like, no, not so fast. And then it makes this lower low in June, right?
Yes.
And then you could have been looking at this and saying, hey, my major support level, it's been breached now. What do I do? Now in your head's going, those thoughts, those fears you have of the economy going in recession, and all of that comes back and it gets you shaken out of your position, right?
Yes.
And then the market back, it recovers support, and then it rallies to multi-month highs in a very short amount of time, right?
Mm-hmm.
And then again, you could have thought, okay, well, we're off to the race. We must be off to the races now, right? But then the market says, no, I need more time. I need more data. And then you have this second leg lower, but now you're making a higher high, right? And you're still holding that major multi-year support level, right? And this is where the smart money now is super long. So now you have even more evidence. You have more basing action. You have more. You have the smart money, commitment of traders data, supporting the bullish side, and then you start rallying, and then you finally see a breakout in November, right? So this goes to show that, look, had you been impatient and bought the original test of multi-year support in April versus waiting it out and buying the breakout in November, I mean, how much did you miss? You could have bought at 1150 versus 1300, right? You're talking about maybe 10%. Okay, that would have been nice to have that 10%. We all, I can see like buying on support, you want to really get that good entry price, right? And be like, hey, I got a really low cheap price. And but there is some like benefit to waiting it out and not having to sit through this chop fast and second guessing yourself and talking yourself out of your position, and instead having the wind in your sails, waiting for the breakout. Now you have momentum. You have the commitment of traders supporting your thesis. You have a multitude of other price charts that are also confirming. So now it's the probabilities on your side, right?
Yes. Yes.
This is what we like a lot of times we neglect probability, right? We think of one trade and compare it to another, but we don't think, hey, which one has the higher probability? So buying something on support, yeah, you're getting a cheap price, but you're potentially catching a falling knife, right? You're fighting the trend. Waiting for the price to turn up and go through your breakout level, you have a higher probability, even though you're paying a little bit of an insurance premium, right? By not getting that lower price down here, you're paying a bit of insurance premium, but you've now upped the odds that this trade is going to work, right? And so now you can even have bigger position size too, right? So this is actually a really key concept. There's a lot of things that this timeline is showing, right? It's showing that, hey, look, markets are a very gradual process. And then number two, there's a lot of different aspects of the market that we can analyze. It's not just growth stocks. It's not just the US dollar, right? There's all these different markets. There's all these different types of data, like commitment of traders and breadth data, and that can support the bullish thesis, right? And then number three is buying on support versus buying a breakup, right? So a lot of things that just in these 30 minutes or so that we kind of looked at now, and yeah, so I just want to bring this chart back up and just make sure that everybody kind of really appreciates that fact, that why we buy the breakout, right? And this is the reason, right? We want to have the wind in our sails. Okay, so.
Well, actually, I have one thing to add, and you might not know this. So when I first started trading, I used to read all those old technical analysis magazines and so on. And one of the first systematic traders that I found that didn't use, and this is honestly very rare to this day, there's probably only one systematic trader that I know of that doesn't use any indicator, not even 100-day highs, nothing. What he does use is a Dow, I forget what he calls it. It's like a Dow, oh, it's a fractal theory. And so basically what he does is just pull up that last chart again that you had up there.
Yeah.
Thank you. So what he does is, once you make that exactly how you drew this chart, he systematically programs his things to buy if it makes a higher low and then breaks out from that secondary high, just like you have it drawn out. That's his system, and he has found that system to be, it's a very high win rate. I back tested it myself. It's a higher win rate than most, like basically any system that's just a pattern system doesn't work for the most part. This does work, waiting for that higher low, buying once that higher low happens, like you can catch a lot of really real good things and much lower than you would catch a real breakout by doing this. If you're waiting for a 100-day high or something, or sometimes that can take a long time, think of the COVID crash, but something like this, you can catch them a lot lower, and this is a really powerful system that we're showing you here right now.
Absolutely. Yeah, really good point there. So yeah, just to kind of summarize everything. So again, markets are a gradual process. There's many aspects of the market that we want to be looking at. The importance of waiting for the breakout versus buying on support, right? And the fact that markets are forward looking, right? And again, going back, the home builders stabilized in April, just a month after the steepest rate hike cycle had started, right? And so there are a lot of lessons that, are coming up just by looking at this one little timeline, all right? So moving on, we already looked at the home builders breaking out, and then we started seeing the mega cap tech making breakouts. So we had Meta breaking out, and this was one of the earliest breakouts, right? So early in January, Meta broke out, and then a few weeks later, NVIDIA made a breakout, right?
Yes.
We had not just mega cap tech, but we had Greece and Argentina making 5+ year breakouts, right? And these were some of the cleanest charts. Let me just see if I can look at this one, right? Like that's, you had this multi-year support, boom, in January, decisive breakout. And yes, it came back, retested that during the February, March correction months. And then look, propelled higher again, right? Greece, same story here, right? Made that big breakout in January, retested it in March, and then boom. The strongest ETFs among over 1,200 large liquid, high AUM ETFs, Greek and Argentina are the top performers over the past year, right? They beat semiconductors, they beat the NY FANG index. This is going back and emphasizing the fact that the earliest breakouts tend to go on and show us tend to go on and be the top performers, right? So we had the large cap tech, we had places like Greece and Argentina, the home builders. These were the earliest breakouts, and guess what? These are the things that are leading performance-wise year to date, right?
Yes.
So always pay attention to what's breaking out first, right? It's so tempting to say that, oh, that stuff broke out months ago, I missed it, and I'm going to wait for this stuff here that's, still like scraping off of its lows, and I'm going to buy that because I expect it to catch up, right? And what you're doing is you're kind of fighting relative strength there. You have these, like how long have we been saying that about Facebook, right? That, oh, I missed it, and it's just gone away from me, and today it's up another 6+%, right?
Yeah. Constantly, and that's a very important point, because it's the tech trade for me, and you've probably seen me battling this with people, clients, friends, whoever, since the beginning. I put it on at the beginning of this year, and I have never in my whole life, I've never gotten so much pushback on a long trade ever. It was stupid, crazy idea. Semiconductors, I mean, I had a friend of mine telling me every day that semiconductors are going to correct by 50%, and like, and once again, like, they may be right, but it doesn't matter to me in my system at all. Like I have a stop there that's, I'm never going to lose 50%. I'm playing the relative strength. I don't, my system, the way I trade, I'll never make money by looking out in the real world and going, oh, we're in a recession, or everything's doing great and we're not in recession or something. That's not going to make me money. What does is the price action. Like, we don't get paid by predicting recessions. We get paid by price action.
Exactly. And, this really goes back to what we were talking about, like how it's been such a dynamic decade, right? Mm-hmm. The price action has created such strong opinions each year, right? Like in 2020, there was such such a strong narrative behind, the exponential age, right?
Yes.
And how like tech is gonna go on this 5+ years. Like we were early innings in a long bull cycle, right?
Yes.
And then commodities took over, and then growth took a big hit. And then the narrative became there's, like growth stocks, or, that was a bubble like 2000, and they're never going to come back for years and years, right?
Mm-hmm.
And that became the narrative. Home builders, they can never come back in a 5% plus interest mortgage rate world. But what happens is those are the markets that have outperformed year to date. And this market has been so good at creating strong narratives and having people chase those narratives, ignore the price action, and then watch months later scratching their heads and thinking, hey, what do I do now? This market has gotten away from me, right?
Yes.
And this is the reason why, we don't want to marry our positions. We want to constantly, there's actually a tweet that I pinned on Twitter. It's from Willie Delwichy.
Mm-hmm.
And read it to you guys. It says, don't get so distracted by what you think might happen that you lose track of what is actually happening.
Mm-hmm. Yes.
This is so powerful. I have this opinion that, hey, look, tech's going to keep outperforming. And then what happens in the last few weeks, value starts breaking out, right? Am I going to, keep mirroring am I going to fight the breakouts in value that we're seeing recently? No, right? I'm going to say, hey, this is the market, telling us pretty clearly, and we'll get to that at the end here, because this is pretty much the last thing on the timeline. But it just goes to show that you have to be adaptive in a dynamic world. You can't be static, right? So
yes, that's a great quote there. That's spot on. You have to constantly be. I think that's the best thing about really being a trend following trader, because for me, I'm always going to have everything on my screen. I don't care what it is, what sector it is. If I'm getting a breakout signal, I'm just taking it. If it's bottoming in a sector that, energy is starting to give me buy signals, and I'm buying energy as tech is taking off. To me, that doesn't actually make sense. Even my macro models, that doesn't make sense to them. But I've learned over the years to just, if my risk management's right and I lose the trade, I'm losing 1% of my account. To try to make whatever, there's the upside is endless in trend following. You don't know. So you just, last year, getting back to your charts, in 2022, there was a very interesting one in the Japanese yen. And for me, if you're in a deflationary type of setup, I think that started all the way in 2021 around February. Yes, I can see my breakdown signal was February 15, 2021. And for me at that time, that didn't make any sense. Why in the world would I be short the yen in this type of deflationary crisis? I've back tested this a million times. I know how this works, blah, blah, blah. Your brain tells you things. But I just took the signal. I shut up. I took the signal. I went short. It was an insane trade. And once again, I didn't catch it perfectly at the top, because that's not what I do. I didn't catch it perfectly at the bottom, but I made a massive trade from February 15th into November 7th, was the exit signal. So it's like, you're not going to ever really know what the perfect trade is, or why these sectors are moving the way it is. Sometimes the best thing to do is just kind of shut up and put on the next signal.
Yeah, no, okay, so just to give you an example of what you just said there, I'm going to pull out a chart that we had just looked at. And yeah, this one right here. So this is the Canadian dividend ETF again, right? And you were talking about, you're taking an energy trade, but you also have, tech on, and what's going on. How can those markets both work at the same time, right? And sometimes from an inner market, we kind of get confused. But look at late 2020 when Canadian dividend stocks, financials, energy, value, all these markets, steel, they all made breakouts in late 2020, right? And then they went on when the month they made major multi-year breakouts, you know what month this is? This is February to March 2021. This is the month that ARKK peaked.
Yes.
So this is crucial here. So you had simultaneously speculative stocks in their late stage melt up, while value is already ripping.
Yeah.
And after these speculative stocks, peak from their climatic moves, you have value continuing to go on for a year, right?
Yes.
And so don't think that, this tech trade is over, so it's perfectly going to line up with the value trade starting, right? There can be this. Okay, so this actually goes to an important point that you just reminded me is just like how the market went from downtrend to uptrend in a very gradual process, the rotation, sector rotation itself can be a gradual process.
Yeah.
So you can have, multiple sectors like, being great performers for weeks, for months, until, a segment of those sectors dominate, right?
Yes.
Just like how, for much of this year, tech has been dominating, but, now we've started to see in the recent month or two that, hey, if you held a mix of, tech and steel and, like global stocks, Latin America, you could have had this really well diversified portfolio, and none of those components would have been any drag, right? So that it's again, we can get lost in the inner market. We can say, hey,
it should be like this or that.
It should be like this, right? And like for since the start of 2022, we've been seeing, like whenever energy rallies, tech falls, right, and vice versa. And in the last couple of weeks, we've seen both do well, right? So don't always be married to correlations, be too obsessed with the inner market. Follow the price charts of the markets that you're going to actually allocate to, right? And so yeah, so just carrying on. We can wrap this up quickly. So there's a lot going on in the last few months here, and a lot of this stuff that's listed, a lot of it is like the tech ETF. So you have the robotics, cloud, the sensor ETF, ERKK. So it sort of started off with the more AI and robotics theme. Those ETFs benefiting, those making the early breakouts, and then you started seeing the more speculative areas like clean tech, ERKK. Those kind of made breakouts a few weeks back. But while tech was making those breakouts, let me just actually point out so we can kind of get a visual for these tech breakouts. So here's what happened, right? So you had this low base, 1 year base, and then in late May, ETFs like this one here, XITK. This is contains some of the more junior, more speculative tech stocks. The XNTK is some more larger cap. So this one made a breakout in May. You have some other ETFs that kind of broke out in June. You had some that broke out in July. So they were like a staggered multi-week process where each week another ETF was making a breakout, right?
Yes.
But what this is showing is the more speculative tech segments of the market, they're making breakouts now, right? When you had stuff like home builders and big cap tech making breakouts early in the year, right? So now this stuff has started, the markets started kind of going out on the risk curve, right? And as the tech trade has been maturing, it's kind of reached out into the more fringe parts of tech, right? Yeah. So okay. So that's technology, but not to lose sight of other sectors. Look what's been happening is XLI industrials, right? So XLI made a massive breakout in June, right? So this is the monthly chart here. So this is a 2 year base, within a long-term uptrend that started, back in 2009. And, and look at the follow through we're getting, right? So this was, one of the earliest segments, just like how within tech, we had big cap tech making the earliest breakouts. Within the more traditional sectors of the market, industrials led, right? So they made the breakout, more than a month ago. And now you're starting to see much more frequency. So you have the Dow breaking out, you have VTV, the value ETF, and I'll just pull that out here, right? This just made a breakout last week from this beautiful base, right? And it's showing some upside continuation here so far this week. And so this is the beauty of the market, is like, it's not value breaks out on one specific day, right? It's all a gradual process.
Yes.
Yeah.
No, I love that. It's that's a thing that I think so many people, when they're looking at markets, especially as traders, I think a lot of people are attracted to it as this fast, fun lifestyle. And I guess like you can make it that way if you want to, but you'll probably lose a lot of money. But really it's this, what we're talking about here is watching for these things to happen and then waiting possibly months for the next phase to happen. Or maybe it doesn't.
Right.
Maybe you did all that work, you've marked out the support, and maybe it chops around forever. I don't know. Things happen. Weirder things have happened in the markets. But the more you come up with your strategy, your plan, and you have these consistent, like we're showing you consistent ways to take trades. We're not showing you like I'm speculating that Apple's going to go up 1,000% so you could be rich in 10 years. I'm not doing that. I'm showing you how to be consistent, like exactly what Brian's showing you, how to be consistent over and over again, dynamic, being able to move in and out of all of these different market environments smoothly, making money, and not getting wed to any of your positions. All those things are very important.
100%, I agree. We can actually just touch on two more things that I missed here on this chart here, Jason. I guess I missed the Japan 3-year breakout, and then the India also made a long-term breakout, right? And again, it's not like the US, it's not just, technology. You have global markets making these massive multi-year breakouts, right? Do we want to ignore this? I don't think so, right?
That's something that I'm noticing a lot, is people are really kind of they were disregarding the rally at the beginning, and they were like, it's just tech or big cap tech, and that's it. It's 5 stocks. It's like, if you looked around the world, that wasn't the case. If you looked at Europe, there were things happening. If you look at Japan, there were things happening. All these things were happening right in front of everybody's faces. And I think the hard thing is to fade the crowd. Like, as you're a new trader, you try to fade the crowd. You can't fade the crowd because you're listening to the crowd. You're going, oh, everybody on Twitter is saying this. This person's saying recession. The Fed was forecasting a recession. I don't care if they're forecasting or not forecasting. It doesn't mean anything to me. My strategy, my plan, sticking to that over and over again, that matters to me. Just like they came out the other day and said they're going to have a soft landing now, and they're forecasting no recession. My systems could all start to flip short, and I'm going to say, oh, well, this is all going short now. None of it's going to matter, because most of the time, the people you're going to see are going to be wrong. Like the people on TV, either they're talking their books or they're not really traders. Like, I mean, that's the other thing that's the very, very hidden thing in finance, is that there's so many people that are on TV all the time that have no money in the market, or the newsletter writers or so on, and they have no money in the market. So what the fuck do they really care? Like, that's the thing. At the end of the day, they don't really care. It could go any way they want. They get paid money by your subscriptions, or they get paid money by being on TV. They don't have any money in the market. So that's also important to note. But the people, we're talking about real trades here. You're talking to two people who have money in the market, and trade every day. So this is something that, not trade every day, but are in the markets every day, their own money.
this is a strategy to really trade.
Absolutely. So, just like I can't emphasize enough, like how important it is to stay, like, follow the leadership, right? And put aside your personal biases, your opinions, right? We want to try to, like capture all the opportunities. Well, you won't capture every opportunity and every segment of the market, but you can align yourself with the major leadership, right? Within sectors, within global regions, um, and minimize your drawdown and achieve some alpha. So when we say it's a dynamic environment, it's easy to be like, oh my gosh, like this is scary. This is I'm gonna like this is I don't want to touch this, right? It's too fast moving. But another person can say, hey, look, this is this totally fits my style. Like I love like looking at charts. I love like looking at different parts of the market, making breakouts, and then diversifying my portfolio. So it's like your process, can either keep you out of the market and be afraid of this dynamism that's in the market, or you can be really benefiting from it, right? And I think this is definitely one of those environments. And I had a tweet out back in April that, hey, look, this market is getting very interesting, and you don't want to be taking any summer vacation here. Because and look what's been happening on the timeline. Like that's when we got all of the major activity, right? All the major, like now the momentum is on our side. Now we have breakout every week. So this is the part where the payoff for quarters of patience is now culminating into this payoff that we've been seeing in the last few months. Right.
Yes. I'm
not sure about, I can't speak for other traders, but, a lot of my performance has, been coming from the last few months. Right.
Same.
We had to sit through some sideways, some indecision in the market, before, some clean trends emerged. Right.
And that's important,
yeah.
That's incredibly like a very as a trader, new people new to trading think if I'm giving money to a professional trader, they're gonna make money every day. Every month I look at my returns, it'll be up. But really sometimes there's the patience game, and like you can't, the thing I've learned over the years is not to beat myself up about it. Sometimes it's like, hey, there's nothing really to do. I only have a few positions on because there's no breakouts, happening like usual. And I'm kind of sitting on my hands at the moment. I'm not really making money. I'm not really losing money. And really, normal people, like they want more every day. They're like, oh, it needs to go up every day. I need to make money every day. And really, it's the game of trading is preservation of capital. That's it. Like,
absolutely.
More than that, it's really like if you can preserve your capital, you will move to the upside at some point. These moves that we're seeing, this cluster of moves, all I wanted to do and all I would keep telling my clients is that, because we had a really great start to 2022, but then it was flat, and all I kept saying during that time was, look, I'm not really trying to make anything crazy right now. I'm not trying to push hard right now or anything like it. What I want to do is be ready for that move that's going to happen. And,
So,
in their head, they're like, well, why aren't you shorting? Why aren't you going long? Why aren't you doing this? Why aren't you selling options? For me, I'm like, I know that move will come again. So wait for those positions, wait for those to build. And it's been a great year. It's been a really, really good year. And 2022 was an up year and such a bad fucking year. And now this year has been really great. So it's like, that's how you have to think about things as a trader instead of the always wanting more, always pushing super hard and not being dynamic to be able to wait through those periods, move from, shorts to longs,
not overthink things too much, and
Yeah.
really put on that new position. I don't, I want to talk to you about one thing too, Brian. Um,
Mhm.
Tom Basso just released something yesterday that I thought was fucking amazing because for me, I as a trend following trader, I've always looked up to those guys. I've always watched those guys. And they've talked about, years of underperformance, years of flat periods, and so on. But the one thing they talk about the most is not filtering yourself out of trades. And what he uses in his example, brilliantly, is let's say I use a 100-day moving average. And that moving average tells me that when the Fed is lowering rates, I should be buying stock. And then when the Fed is raising rates, I should be selling stocks or flat. He said this period would be perfect. He's like, think about it this way. You would have filtered yourself out of this entire rally if you were sitting there short because of this filter, you know.
Mm.
And if your filter had two different things, and let's say it was waiting for a price signal, either way you wouldn't be long, or
Yeah.
you'd be short, so it's very I love the way he put that. And I've struggled with that too, because when I first started trend following, I was like, okay, I'm only gonna buy these things when they're over when I get signals over the 200-day moving average, and I filtered myself out of a ton of trades doing that. I think why people do that and overthink things too much is, my opinion, is fear of loss, fear of losing, fear of having losers. I wanted to know
Yeah.
what you think about that. What do you think why we try to stay away from losers so much, and why do we, why people try to create so many filters sometimes that filter themselves out of trades?
Yeah, so, there's no perfect, like what we do is not, it's not going to be perfect all the time. It's not going to work all the time, right? You were talking about how Tom Bass was saying there's like, periods of underperformance. And, when looking at this timeline, when the market bottomed in October and, it kind of made that initial rally, but then it went sideways for, many months this year. It was easy to, it was difficult to sit there and be like, hey, the market is actually over the last few months outperformed me, right? Because here I am trying to wait for more confirmation, more breakouts to add size to my portfolio. And so initially, like, it's difficult to, like, like as trend followers, we miss that initial bottom, right? And we kind of lag the market initially, right? And that's, again, that's, the insurance that we're paying. And so you have to be able to sit there and not beat yourself up and be like, hey, why am I not, like outperforming the market each week, each month, right?
Yeah.
And but what ends up happening is, as the market starts to, give confirmation, the momentum picks up, you're able to really go on in size with risk management. You have clean, defined breakout levels that you're, where you're going to be wrong. And then you can go in with size. And then that's when you really outperform the market, right?
Mm-hmm.
And you not only catch up, but you surpass the market's return, right? And,
Yes.
I've seen this over again personally, like in 2020, right? As stuff was crashing in March, I felt good to not be, too heavily exposed to the market, right?
Yeah.
But as the market rebounded in such, with such vengeance, right, with such speed, like, a lot of trend followers missed like a sizable, like, 20% off the lows, right? And, it's easy to be like, oh, that would have been such a juicy, like, return if I had just been long that 1 week, right?
Yeah.
And it's so easy to beat yourself up. But what ended up happening was 2020 was actually the perfect example where a lot of the stuff really started flying later in the year.
Yes.
And, you could have, like, done nothing in the first half of 2020 and really outperformed the market, caught up, and then some in the second half of 2020. That's when you had these clean defined bases markets coming out of these clean defined bases momentum really picking up. And that's kind of where I see, these last few months is really similar to that period, right? And, so it's okay, to miss the first few months off the major low. And when the market really starts moving out of these big bases, that's when you can really put on size. You can do it with risk, like really clean defined risk levels, and then that's where you outperform the market, right? So it's all a waiting game. And so why do we do this, right? Why do we filter ourselves out like this? Because we could have saved ourselves a lot of trouble last year, right? When the market was weak and declining, there's a lot of people that lost a lot of money last year, right? But just having simple trend following rules, you could have sidestepped a lot of that pain, right? And then we had to pay for it by missing the initial move off the bottom, but that's okay. We missed a lot of the pain. We missed a lot of the pain too, right? So, and now we're catching up as the momentum is picking up in the market. I've surpassed the market's performance, right, in these last few months. So this is all what trend following is. This is why we do what we do, is to minimize our drawdowns, right? I tweeted yesterday that, trading is all about minimizing regret. That's all it is, right? We're trying to minimize the regret of being in losers too long and not being in winners long enough, right? And the only way you can really do that is if you follow price and you don't follow your opinion. It's easy to be like, oh, this is too expensive now and I'm going to get out, or this is going to rebound and I'm going to keep holding, and it keeps sliding down, right? And so I don't know if I answered your question there.
Can you hear me fine though?
Yeah.
Okay, good. All right. Yeah. So basically, it was my fault. I should have sent you that article beforehand to check it out. I was just thinking about it at the top of my head because you said something that triggered me to think about it. But basically, like you described why we're trend followers perfectly. But the thing of filtering is a little bit different. I'll have to send you that article. We can chat about it later.
Okay. Yeah.
But yeah, it's for me, it's what you brought up was good because of the outperformance, like what you were talking about with the people being like, damn, I missed that bottom, or I missed that top or something. I know for me, 2020 was a very interesting year for me because there were times where I had, that's the thing we talked about. I had really good returns in 2022 for what the market was. I still was putting up, over 25% in that year. But the 2 years before that, and 2020 is probably the best example for what we're talking about. I didn't have long signals for a long time in the market. I didn't have a lot of long signals at all for basically, I think I started to perform really well coming into the summer and into the year end, and especially the last 2 months of 2020 were probably my best 2 months of returns ever. So it's interesting, and those were triple digit return years. And I'm not talking about my a small account. I'm talking about my fund. So my fund, being able to put those type of returns together for a fund is really big and unique. And I had 2 back-to-back years of that. While in 2020, I remember I was short. I made a lot of money on the oil short. I made a lot of money in some of the commodity shorts into COVID. And then a lot of them got spit back out the other direction. So I gave a little bit of money back because, I didn't sell all of those perfectly at the bottom by any means. And then as we started to turn back to the upside and got these long signals, now I was making really good returns the other way. I remember things like lumber, the bond short started to take off at the end of the year. Oil started to get long oil into the election, and energy. And all these things continued to kind of happen the other direction. But once again, it wasn't, I majorly outperformed the market that year. But it wasn't by coming in and being like, I got to do this, or I'm going to miss this bottom
Right.
and try to buy the bottom. It was just
Yeah.
waiting for signals, not caring that,
That,
oh
that's
my God, 1 month I'm behind the market, like that doesn't matter. Nobody, it's only and I think that's the one problem with the hedge fund industry is that the
right.
hedge fund industry doesn't care about your returns at all. I'll be honest, we don't.
Yeah.
I do. I try to, and I try to keep a very few clients so I can keep that going. But they
Yeah.
care about how they look to you every month and every quarter. So every
Right.
quarter they want to put together some form of return. It doesn't matter if it's 1 or 5%. They just want to make it look consistent. They don't really give a shit about anything else besides that. So make this
Yeah.
consistent return. For me, I know from back testing that the best returns really come from traders who are looking for really big gains in those outlier trades, and those only happen a
Yeah.
few times a year. So
Yeah.
when you're looking at trading always as a like, I just want to be consistent, I want to be consistent, you won't make shit. And also, consistent systems that tend to win a lot, one bad trade in those systems usually wipes out most of your returns.
Mm.
Whereas low win rate systems like trend following systems like we use, most of the time, one trade can make up for all your losses, easily.
Oh,
And
absolutely. Yeah.
like we're talking about in
Yeah.
2020, it wasn't an easy time in that trading. Like there was nothing easy about 2020. There was plenty of losers and plenty of stop outs and plenty of whipsaws. But at the
Yeah.
same time, those huge trades I mentioned, even Bitcoin and all those things, those huge trades that I mentioned, that paid for the
Yeah.
whole, like any of those small losses. So you were talking about 1%
Right.
of the account losing. Some of those trades were 100% trades, like on their own. So what we're talking about here is two different ways of looking at it, and really looking at it in a way that, how do we produce the best returns over time? As an individual trader,
Exactly.
you do not have to be consistent. Your goal is
Yeah.
to produce the best returns over time. Sometimes that's a year that's even bad. But if you're positioned correctly and you're disciplined and you're using your right things, I tell people that all the time, like, your returns don't matter as much as your discipline. Because
Exactly. Yeah.
maybe you'll have a year of really great returns, but if you can't do it again and again, it doesn't matter. So your
Right.
discipline, even if you're taking these trades and you're really small and you're just working on your discipline, like, I don't care, do not work on making money, work on discipline. Put together a
Hmm.
trade and you're like, okay, well, I have this trade and I'm following my system, I'm following my plan over and over again. You will make more money than every trader out there, like, for sure. Because no, most traders will make mistakes and they will do stupid things and they will pull off trades, and we all do it. It's not something that I'm making fun of somebody over. It's something we all do. Over time, we stop doing it as much. But some once in a while, you'll have a dumb trade that'll come up, and I'll make myself read Reminiscence of a Stock Operator again. And that's what that usually does.
uh, Absolutely. Like, we can't ever emphasize enough how important discipline is, how important patience, right? Like, you can go through a big period where the market outperforms you, right? But you just have to, have enough belief in your system, right? You put in the homework, you've done the research, you read the books, and you've convinced yourself that, relative strength works, that breakout trading, trend following works, right? And then you stick to your guns, and then you have this, just like you said, in a brief amount of time, you more than make up, any kind of lag that you may have had on the market, right?
Yes.
And so it's all about just sticking. Like, the market rewards patience, whether you're a buy and hold person or you're a trader. All these different edges at work, they all require patience, right?
Yes.
Yeah.
And during the year, I'm never sitting there looking at, I think that's also an important thing. I'm never sitting there looking at my returns compared to the S&P 500 and going, I'm doing this, I'm doing this. Like, that's never something I'm
Yeah.
going to do. At the end of the year, sure. Maybe at the end of the quarter, if I'm working for a big hedge fund at the time or something, but at the end of the year, yes, I want to outperform the S&P 500. That's the whole reason we trade. But during the year, I'm not going to sit there and drive myself crazy of going like, oh, because that's what normal people do, right? I think that's an important thing of what we're saying. Normal people, 95% of people don't make money in the markets. And that's what normal people do is they look next door and they call it keeping up with the Joneses. And they're trying to keep up with them, whatever they're doing. So normal people are doing the same thing. They hear about their friend and their friend bought Bitcoin here, which probably he didn't. You're just believing it because you're seeing it on Twitter or your friends talks really passionately about it. And you're like, oh crap, I wish I was doing that. And then you panic into things and you're trying to outperform your friend. Like that, none of that's going to make you money. And none of that's real or repeatable. It's not repeatable. Like if you're just mad and putting on trades because your friend put on a trade, like you can't do that again and again. But what you can do exactly what Brian has shown you here. You can do this every single year, again and again and again, and it's timeless. When we're talking about technical analysis, this has been around for a long time. This is something that is completely timeless. Trend following and technical analysis have been a way to make money for a long time. There are firms like Dunn Capital and more that have been making money for over 100 years using these types of strategies.
Absolutely, yeah. So these were, when I came on your show last time, Jason, I kind of talked more about my strategy, like how I use relative strength, how I, look at charts, how having a longer time frame, weekly, monthly charts, drawing horizontal lines, keeping it simple. I talked about all of those things, and today was more of a, kind of looking back at the past 1+ years, kind of looking at how this market evolved, and more just kind of giving people perspective that, look, you got to be patient, markets take time to make all these different transitions, from downtrend to sideways to uptrend. And within the uptrend, it takes time to make sector rotations. So there's a lot of more of a bigger picture, just to kind of give people a feel for what to expect, right? This is not, markets don't bottom on a single day and top on a single day. Everything's a gradual process. Different markets will have their own, dates, right? And periods where they outperform and shine. And so, I hope, people got something useful out of this. And it was really fun to talk about it.
Nice. Thanks, Brian. No, I love this type of thing because one, it takes what you put in your last video, and I'll put a link to Brian's last video in the description, but it takes what you did in your last video to today, and people can check out your last video to know a little bit more about your strategy and what you do. And then this can kind of be the timeline of what you've been doing since. So I really like this. I also, to me, I really try to focus on, I'm not trying to make headlines. I'm not trying to, get 1 million views on each video. I want these videos to be a masterclass in trading, something that people can go to. They don't have to look at this today to figure out what you're going to buy. They can look at this and create their own strategy and way of trading. And that's what I think is the most important thing, because I don't get, I think people, when they first start trading, you run around trying to find a guru of some sort. And you want to figure out that they can be a really good trader here, or they can make you money or something. And what you find over time is that you have to come up with your own strategy and plan. And so Brian has shown you 2 videos now of strategies and plans and ways you can implement them into your own trading. And I think that's incredibly important. So thanks so much for coming on, Brian. It's absolutely a blast to have you on. And anytime you want to come on soon, you're always welcome. Everybody loves to hear from you and what you're doing in the markets.
Well, glad to be here, Jason. Great talking to you today.
All right, man. Bye.
Okay, take care. Bye-bye.